All right, so get this right. Imagine Tesla, but it's worth more than Apple, Microsoft, and Google combined. That's the kind of wild future we're looking at today.
Yeah, sounds pretty crazy.
Seriously. We're diving into this bold prediction based on this article you sent over. It's by Oliver Rodzianko, a tech investor guy over at Seeking Alpha.
Oh, yeah, I know him. Seems like he's always got a hot take.
Well, this one's a scorcher. He's laying out a scenario where Tesla hits a $3.5 trillion valuation, but get this, by 2029.
Whoa, hold up. 2029, that's like 5 years away.
I know, right? And the kicker is, he thinks it all hinges on a Republican sweep in the next election.
Interesting. A Republican trifecta, he calls it.
Right, exactly. Republicans snagging the presidency, the House, and the Senate. Rodzianko believes this could be a total game changer for Tesla.
Especially for their self-driving car ambitions.
Now, you might be thinking, hold on, why would Republicans be so good for Tesla?
Well, that's the juicy part. Rodzianko argues a Republican-led government would mean big deregulation in the tech world.
Less red tape, fewer rules. Basically, a smoother ride for companies like Tesla to innovate and expand.
It's like taking the emergency brake off.
Totally. And that's where Tesla's Cybercab project comes into play, their big bet on autonomous taxi services.
Oh, yeah, that robotaxi thing. Rodzianko thinks that could be a $1 trillion market, just massive.
Trillion with a T. He believes a Republican government would be way more likely to, fast-track the approval of self-driving tech.
Giving Tesla a huge head start in this potentially revolutionary industry.
I mean, it makes you think, how much does politics really influence a company like Tesla, especially one pushing the boundaries like they are?
It's a fascinating question, and Rodzianko dives right into it. He points out Tesla's actually been facing a lot of pushback from regulators.
Like they've been trying to drive uphill, but someone's got the parking brake on.
Yeah. So this potential political shift could finally release that brake, letting them really accelerate.
But hold on, there's another interesting twist to this story. Something you might not expect. The EV tax credit?
Oh, right. That $7,500 federal incentive for buying electric vehicles, you'd think getting rid of that would hurt Tesla, right?
You would. But Rodzianko actually thinks it could give them a competitive edge.
Seems counterintuitive, I know.
But here's the logic. A lot of Tesla's rivals, they lean hard on those subsidies to make their cars affordable.
Without them, they might struggle to keep up, leaving Tesla with even less competition.
It's like clearing out some of the weaker players in the game.
Bold prediction. It shows how tangled up this whole situation is. We've got technology, politics, economics all swirling together.
And it begs the question, what's the bigger picture here? If this scenario plays out, how does it affect not just Tesla, but the whole EV industry?
Now that's a thought. It's like a chain reaction.
Right. Like, is this a peek into a future where Tesla's the king of the road? Or are we getting way ahead of ourselves?
Well, to really understand that, we need to dive into how Rodzianko gets to that mind-blowing $3.5 trillion valuation.
All right, so let's get into it. What's the secret sauce in his calculations?
He's using financial projections and some fancy calculations based on things like Tesla's projected revenue growth, their EBITDA margin, and something called the EV to EBITDA ratio.
EBITDA margin, EV to EBITDA ratio. Sounds a bit like a Wall Street secret code, right?
It might sound intimidating, but don't worry, we'll break it all down in plain English. The key takeaway is that even using what he calls conservative estimates, Rodzianko sees a pretty clear path for Tesla to hit that astronomical valuation.
So we've got Tesla potentially hitting this insane valuation, possibly because of a Republican-led government, and a potential shakeup in the EV market. It's a lot to unpack.
Definitely a lot to digest.
And to really grasp it, we got to understand how these financial predictions actually work. That's where we're headed next.
Let's do it. Time to decode those Wall Street secrets.
All right, so let's crack the code on these financial forecasts. First up, we've got this revenue CAGR. What is that all about?
It stands for compound annual growth rate. It's basically a way to project how much a company's revenue will grow year over year. Like, imagine you plant a tree and it grows taller each year.
Okay, I'm with you.
The SCANDR is like predicting how much taller that tree will get each year, assuming it keeps growing at a steady pace.
So is a higher KGR a good thing or a bad thing?
Well, generally a higher KGR is what investors like to see. It means the company is expected to grow its revenue more quickly.
So in Tesla's case, Rodzianko is predicting a 20% CAGR over the next 5 years.
Yeah, which is pretty ambitious. He's really banking on those robotaxis taking off.
20% every year for 5 years. That's like some serious growth.
It is, but remember, it all hinges on those predictions about autonomous vehicles and that favorable regulatory environment we talked about.
Right, so we've got our revenue tree growing tall and strong, but what about this EBITDA margin? That one still sounds a bit like a foreign language to me.
Haha. Yeah, it's a bit of a mouthful. But it's not as complicated as it seems. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a way to measure how much profit a company is making from its core business operations before all those other expenses get factored in.
So it's like their pure profit, the money they're actually making from selling cars and running their robotaxi service, before the government takes its share and they pay for things like factory upgrades.
You got it. And the margin part tells us how much of their revenue is turning into that pure profit. A higher EBITDA margin means they're running a lean and efficient operation.
Okay, that makes sense. Rodzianko estimates Tesla's EBITDA margin will be around 22.5% in 2029. What does that tell us, assuming his crystal ball is accurate?
Well, it means that for every $100 they bring in, they'd keep about $22.50 as profit after covering those core operating costs. That's pretty impressive.
That's a pretty hefty chunk of change.
Yeah.
But we still got one more piece to this puzzle, right? That EV to EBITDA ratio thing.
Right. This one helps us understand how much investors are willing to pay for each dollar of Tesla's EBITDA. Think of it like buying a house. The EV to EBITDA ratio would be like comparing the price of the house to how much rent you could collect from it.
Oh, I see. So a higher ratio means investors think the house, or in this case Tesla, is a really good investment because they expect it to generate a lot of profit in the future.
Exactly. And in Tesla's case, Rodzianko is using a pretty high EV to EBITDA ratio based on their past performance and his optimistic projections.
So that high ratio, combined with that 20% revenue growth we talked about, that's how he gets to that astronomical $3.5 trillion valuation, right?
Bingo. But it's important to remember that these are all projections, not guarantees. The actual outcome could be higher or lower.
Right, like we were saying before, it all depends on those assumptions about self-driving cars and those regulatory changes.
Exactly. There are a lot of ifs built into this whole scenario.
Okay, so we've explored the building blocks of Rodzianko's prediction. We've seen how those revenue projections, profit margins, and investor sentiment all play a role. But before we get too carried away with all this number crunching, let's step back and think about what this means in a broader context. Like, why should someone listening to this, someone who might not be a stock market guru, care about these financial projections?
That's a great question. I think the key takeaway here is that understanding these financial concepts can empower you to be a more informed consumer and citizen. You'll be able to see beyond the headlines and understand how businesses operate and how the economy works.
It's like having X-ray vision for the financial world. You can see how all those gears are turning and how different factors can influence a company's success.
Exactly. These concepts apply to all kinds of businesses, not just Tesla. They can help you make better decisions about your own personal finances, too.
So it's not just about becoming a stock market whiz. It's about developing a better understanding of how money works in the world around us.
Absolutely. It's about becoming a more financially savvy and empowered individual.
It's kind of like we've been building this whole picture of Tesla's future. But it's like one of those lenticular pictures, you know, the image you see depends on the angle you're looking from.
Right. Depending on how those political winds blow, things could look really different.
Exactly. Like, what if that Republican trifecta just doesn't happen?
Well, that's the big question, right? Rodzianko is pinning a lot on that specific outcome. We've got to consider what happens if things swing a different way.
It's like we built this amazing Tesla tower, but the ground underneath could be totally unstable.
And if those regulations don't get loosened or maybe even get tighter, that could really throw a wrench in Tesla's plans.
It makes those financial projections we talked about seem a bit shaky, right? Like,
Yeah.
What if those robo-taxis hit a roadblock? What if those rosy revenue predictions don't pan out?
It definitely injects a dose of reality into the situation. Investing is always about balancing risk and potential reward. No matter how good the numbers look, there are always factors you can't fully predict.
I guess that's why they call it the market and not the sure thing.
Yeah, exactly. And that's why it's so crucial to do your homework. Understand the company, the industry, the political landscape. It all ties together.
So how do you, actually weigh those risks against the potential rewards? I mean, I'm looking at this from a regular person's perspective, not a Wall Street hotshot. How do you make a decision when there's so much uncertainty?
Honestly, there's no one-size-fits-all answer. It comes down to your own personal comfort level with risk, what your financial goals are, and your overall investment strategy.
So some people might see all this political uncertainty as a giant red flag, while others might see it as a chance to buy in while the stock is maybe a bit undervalued.
Exactly. There are different approaches. Some investors are more cautious, while others are more willing to take a gamble.
It's like some people are happy cruising in the slow lane, while others are all about putting the pedal to the metal.
Haha, that's a good analogy.
Yeah.
But whichever lane you choose, the important thing is to be informed, do your research, and make a decision you feel good about.
This whole deep dive has really underlined that investing is about way more than just looking at numbers on a spreadsheet.
It's about understanding the bigger picture, all those forces that can shape a company's future, the political stuff, the technological advancements, even social trends.
It's like detective work.
Right.
You're piecing together all these clues to try to figure out what's going to happen next.
And that's what makes it so fascinating. You're constantly learning, adapting, trying to stay ahead of the curve.
So as we wrap up this deep dive into Tesla's autonomous future, what's the key message you want listeners to walk away with?
I think the biggest takeaway is this. Don't be afraid to question assumptions, to dig deeper, to do your own research. Don't just take someone else's word for it, even if they seem like an expert.
It's like that old saying, trust but verify.
Exactly. Especially when it comes to your hard-earned money.
It's been a wild ride exploring this potential future where Tesla could dominate the roads and maybe even reshape the entire auto industry.
We've looked at the numbers, the tech, the politics, and even a little bit of psychology.
And hopefully we've empowered you, our listeners, to think critically about these complex issues and maybe even spark some deep dives of your own.
Because at the end of the day, knowledge is power. And in this rapidly changing world, the more you know, the better equipped you'll be to navigate the road ahead.
So until next time, stay curious, keep exploring, and never stop learning.